What's going on, everybody? Welcome into another video from the Bulls and the Bears. It is another weekend wheel video where I go over the wheel strategy and my plays from last week, as well as go into the game plan for next week. This past week was great. Everything worked out perfectly. However, there were adjustments to the game plan. So, if you're following along with me and are trading along with me, I recommend that you follow me on Twitter because every little change to the game plan, every little update and pivot that I make, I post there live on Twitter. So you're going to want to follow me there. Otherwise, sit back, relax, and let's get into the video. Alright, we're going to start with the graphic from last week's plays. We had 4 plays that we went over last week. Khols at a $31 strike, Wells Fargo at a $40 strike, US Bancorp at a $47.50 strike, and a Schlumberger option at $39. So with the intention, of course, for the price to remain above these levels so that the puts that we sell expire worthless and we get to keep that yummy premium. So let's just go over those plays really quickly, because they all worked out. Long story short, they all worked out. We actually had a pretty positive day in the market, positive week in the market. So you can see Khols, I have it all mapped out here. The strike that I chose, a $31 strike, is the horizontal line. The vertical line is basically the finish line, the end of the week. We need it to stay above the horizontal line by the vertical line. So you can see, obviously, we closed at $41. We were nowhere near the $31 strike. That works perfectly. I didn't hold it all the way to expiration. I usually like to close the options, when I have a lot of the premium, because at the end of the day, time is a risk to us. If we have 80% of the premium locked up within 1 or 2 days, there's no sense of holding that option for another 3 days for more than double the time for that extra tiny little 20%, 10, 20%. It's not worth the time risk, in my opinion. I'd rather just take that premium and walk away. So I ended up selling 2 puts at $31 strike for $40, bringing in $80 total. I closed them both on Wednesday for $10 each. Kind of expensive. Probably should have held it a little bit longer to maybe close at 5 cents each instead of 10 cents. But it was a $60 net profit, and I'm happy with that. So that worked out perfectly. Unfortunately for the others, US Bancorp, let's go over to US Bancorp. Again, worked perfectly. Horizontal level at $47.50. That's the play I said. We just had a huge rally. I mean, everything worked out perfectly. So the problem was it gapped up and it ripped up on Monday. So the strike that I chose, $47.50, the premium wasn't enough. It wasn't giving me enough premium for that strike, so I ended up not playing it. I tried to set some limit orders, looking to see if maybe it would sell off a little bit and then fill me at that level, but it didn't. The premium was just too low. We're talking like $15, $20, and that's too cheap. I want at least $25, but ideally more than that, and it wasn't giving it to me. So instead of like choosing a higher strike and obviously getting more premium that way, I didn't want to do that. I didn't want to increase the strike and increase that risk. So I just didn't play it. I hope you guys did if you're following along. It did work out perfectly, but I didn't end up playing it. Same exact thing with Wells Fargo. Here's the level. It's at the $40 strike. Worked out perfectly, but it gapped up and ripped up, and I was not able to get a good fill at 40, so I didn't play it. So those two options weren't playable for me. And same thing with Schlumberger. This thing worked out amazingly because it made new highs within the past, this little time frame. It's not all-time highs. Here's the weekly chart. So it's not all-time highs, but it's a significant breakout nonetheless. A 2-year high, 3-year high. So, but again, it gapped up and ripped up just like the banks. So I was unable to get a good fill at $39 strike, so I didn't play it. Even though they worked out perfectly, I was not willing to increase the strike in order to get the premium that I wanted because that wasn't the game plan. So I didn't play them, even though they worked out. So I made adjustments. I made some other plays, earnings plays. And that's why I recommend you guys follow me on Twitter, because it's this type of audible, this type of pivot to the plan that you won't know I'm doing unless you follow me on Twitter, because I post everything live. And let me bring that up right now. Here's my Twitter page. Let me just go back down to, okay, this is Monday. I said I'm in on Khols with 2 cash card puts at 31, bringing in $80. Looking to get something with US Bancorp and Wells Fargo, but they gapped up today and the premiums aren't high enough. Watching and waiting right now. And then you can see my position on Khols. I'm transparent. I'm showing you like it is. Like I said, I never got filled on those others. Didn't get to play them. So this is where the pivots came in. Zoom had earnings this week, so I played an earnings play on Zoom. Selling a $50 put on Zoom. Will it have crappy earnings? Probably. Will it drop 40%? Guess we'll find out shortly. This was, I sold this after 3 p.m. the day of earnings. I brought in $64 at a $50 strike. So if you could bring up Zoom here, it actually had solid earnings. It ripped up after earnings. So it didn't even sell off. So I was not at risk whatsoever. But, I mean, you have to really go back. I mean, $50, that would be all-time lows. The all-time low is about 60. And I was selling a put at 50. This thing is already beaten up, broken, beaten, scarred. And for it to just sell off, drop another 40% right then and there after earnings, and hold that level, and hold that drop of 40%, I found that very unlikely. So that's why I made the play. Sold a $50 strike and brought in $64, and it worked out perfectly. I sold it the very next day. Here's my next tweet, the day after, the morning after. Successful Zoom earnings play right here, 95% capture of premium. I didn't expect such a strong move after hours. You can see my filled orders. I sold at 64, bought it back the next morning for $3. Profited $61. I had to make these adjustments because Khols was the only thing I could play as part of the game plan. Everything else went on without me. So I had to find other ways to make money in addition to Khols, because Khols was part of the plan and it worked out. Here's my tweet saying that I closed it. Closing my cash geared put for $10 each, sold 2 for $40 on Monday, so a $60 profit or 75% capture of the premium. Small but reliable. That's what she said. So that was Khols. I already explained that one. And then another earnings play, I think my final trade of the week, was on Snow. Right here. I replied to my tweet, so this is the original tweet. Another earnings play, this time on Snow. I actually like this company. Even though it doesn't pay dividends, I wouldn't mind owning it at $87 if it does happen to drop over 30% after hours. You can see here, sold one contract, average fill price 62 cents. So I sold one contract at $87 strike for a $62 premium. Check out Snow quick. It did drop after earnings, but my strike that I chose was $87. So way down here. Right about there. If you look at the weekly chart, that would also be all-time lows. So it'd have to, again, just like Zoom, is getting hammered. For it to drop 30% or more like 33% and sustain that drop, that would be pretty dramatic. It was like already about oversold anyway. So I wouldn't mind owning shares at that point because I do like the company, even though it doesn't pay dividends at that price at this time. With the market being as beaten down as it is, with a potential rally coming at any moment, like we already saw this week, I wouldn't mind owning it at that level. And if I go to the 15-minute chart, you'll see that it dropped. This was earnings. It was at $130. So it would have had to drop $50, which is probably at that point over 33%. And it did drop, but only down to 110. And it opened at 116. So that's where I came back the next day and said, another successful earnings play this week. Sell that IV. I bought it back for 5 cents. So I made $57 profit on that trade. Earnings play. It had bad earnings. It dropped, but didn't drop far enough because I made sure to get way out of the money for that safety. Got that $62, profited 57, and that was it. So those were the 3 plays I did. Khols and then 2 earnings plays, one on Zoom, one on Snow. Again, these are adjustments to the game plan that you would not have known I did unless you followed me on Twitter. So I suggest you do that. I have my link to my Twitter page in the description. Now, let's get on to this week's plays. So we're going to lead off with a third time's a charm. We're staying with Khols, guys. Khols again. Why Khols? Because the premiums are there. Plain and simple. Looking at the options chain, We have some solid premiums on a small priced stock. Khols, like a discount retailer. Why are the premiums so high? I really don't know. I'm guessing IV is just high because retailers as a whole, like Target, Walmart, even Khols after earnings, we're getting hammered. So there's a lot of volatility, I think, at the moment in those names, and that's probably why the premiums are high. But we'll take advantage because we are option sellers. We like high IV. So you can go as far down as like $35 strike, $36 strike, and get solid premium. Again, I look for at least 25 bucks, ideally more. The $35 strike is offering $26 at a midpoint, but by the time we open on Tuesday, because Monday we're closed, the premiums are going to look a lot different. With Tuesday being the first day of the week, I mean, I think Theta's going to do a number on these options because there's only going to be 4 days left on the contract. We go from like 7 days left on Friday to all of a sudden 4 days. So it's 3 days, boom, of duration gone. So I think come Tuesday morning, these option premiums are going to look a lot different. So I'll see what they look like, and I'll see if I want to make any changes. But given the premium, given the chart, I'm happy playing the 36.50 level, and that's already drawn out here. The vertical line is where it needs to is the finish line, the end of the week. The horizontal line is 36.50. I'm looking for Khols to stay above 36.50. You can see we made a nice bottoming tail and then pushed up off that low after we were already oversold. I think we can stay above this price. I actually like Khols longer term because I think the discount retailers like your Khols, like your TJ Maxx, they're going to be the ones that are benefiting from the impending recession that we're going to get. Because people are going to want to continue to spend money on clothing and stuff and all that, the department retail stores, but they're going to be tight on money. They're going to be more drawn to the discount retailers. I think the Macy's of the world, Khols and like TJ Maxx, like I said, they're going to be the ones benefiting more so than your typical larger, higher priced luxury stores. So if I do have to own the shares, I'm okay with that. They pay dividends. It won't even eat up that much of my account. It'll only take up less than a quarter of my account. So I'm happy with that, even if I do get assigned. So $36.50 on Khols. Let's do it. Up next, we have Gap. Gap Inc., The Gap. I played this a couple weeks ago and successfully, and I'm looking to play it again because the premiums are looking okay. It looks like we're kind of at a near-term bottom for Gap. It just had earnings. Look at the 15-minute chart. This big drop was earnings, and we got pretty low, but we rallied. We ripped and rallied on Friday, and we're up here pretty good. Do I think it's going to sell all the way back off? Not necessarily. I think this could be a solid short-term bottom. We hit oversold at that bottom on the daily chart and then ripped up. So I think we could find some good area of support at this 950 level. 950. Maybe look at the hourly chart. Clearly, every time we get down to this area, we've been bouncing up. So maybe if we can have more green in the market, I think that's possible. I still am bearish overall. I think we still move lower. But I still think we can, in fact, move higher in the short term, bear market rally. And I think that can continue into this week, not just a couple days from last week, but into this week as well. So I think Gap can stay afloat. I don't think it's going to be making new lows this week. If it does, that's okay. It pays dividends. It's a cheap price. I'll be happy with it. And because it's a cheap price, I'm able to sell multiple contracts. I like to have every position to be about a quarter of my account at most. Unless there's special situations like Zoom earnings or Snow earnings, I usually like to have your standard plays just to be a quarter of my account. So since it's only $950 of collateral per contract, I can sell up to about 5, maybe 6, but I'll probably just do 5. And at $950, it's paying about $8 a contract. That'll give me $40 total if I sold 5, and that's above my $25 minimum, so I'll be happy with that. So we'll see if the premiums cause me to change my mind on Tuesday again. That's going to have to be announced on Twitter. But as for now, the 950 strike looks fine to me, selling 5 contracts there. Lastly for this week, we have Hormel Foods, ticker symbol HRL. They are in the food and beverage industry. They're in the grocery segment, refrigerated foods. They produce meat and all that stuff. So I like that industry right now because these are necessities that people have to buy. Therefore, I think they're going to benefit from inflationary price increases, price hikes on their sold goods because people have to buy them. So if prices go up, that's really not going to change the amount of volume on their sales, I don't think. And since prices are now higher, they're going to make more revenue. And they have earnings this week. That's why I'm talking about that. So this is a riskier play because they have earnings. So there's that volatility potential. But I think earnings prove it to be okay because, like I just said, people have to buy their products in groceries and stuff. So with inflationary prices, inflationary costs passing on to the consumer, I don't think that's going to drive traffic away. It's just going to mean they're going to make more money. So I expect solid earnings. Hopefully I'm right. I'm choosing the $47 strike. It's not a large mover. We had one drastic day here, but I didn't see any radical news about that. But $47 is about $1.60 away. But you can see on the chart, it's a pretty big range. It doesn't move that much in a given day, like maybe 50 cents to $1. And obviously, you can look back at the chart, lots and lots and lots of support down here at 47. We stayed down here for a month, just people accumulating shares, buying, and then we finally, buyers went out, ripped up, never looked back. And as soon as we did come back on one day, maybe 2 days, we bounced right off of it. Buyers bought that thing right back up, large lower wicks, all good to go. So I like that level of support. I think earnings should favor Hormel Foods coming up this week. I don't know exactly what day it is, but it is this week. I'm looking at the $47 strike right now, offering $60 premium. Even if Tuesday, does a good number on it, if Theta does a good number on it by Tuesday, it'll probably still be above my minimum. So I'll be playing it most likely. So $47, a riskier play because of earnings, but I feel okay with it. Again, as always, they pay dividends, and it's not going to be a huge part of my account because it's a cheaper price. It's below 50, so it fits the criteria. It checks every box. So that's it. Those are the 3 plays this week. We have Hormel Foods at 47, just showed you that. Khols at 36.50, and the Gap at 9.50. Before I go, I'm going to show you quickly my Excel file that I'm keeping track of with the wheel strategy because May, as far as I'm concerned, is over. We have one business day in May, and that's Tuesday, but then the rest of the week is June, so I'm going to consider this upcoming week to be June profits, which means May is over. And here's my results. I also have April up here too. $677 made in April. I started mid-month with that one. And then May, after a full month of May, I made $1,557. I mean, come on. If I was day trading, an hour a day, 1 minute charts, light speed, and I made $1,500 a month, I'd be thrilled. I'd be jacked to the tits, okay? So yeah, the wheel strategy, it's boring, right? It's very passive. It's not as exciting, but who cares if you can make over $1,000 in a month? Now, I will say this. There were a few day trades in here. I couldn't help myself. Tesla, Amazon, I did a few day trades. Let me just highlight them all. They're right here. And it made up about $400 of all this. So I'm highlighting all the day trades that I should not have been doing. So these are kind of outlierish trades. It makes up $455 of my monthly profit. So if I get rid of those, if I get rid of all the day trades that I shouldn't have been doing, that's skewing the data, I still make over $1,000. So if you take that $455 of day trades out of the data, I still walk away with over $1,000. Had a nice Airbnb earnings play, made $200 there. I had a Twitter swing trade that I will include because that wasn't really like a day trade that I shouldn't be doing that's adding a shit ton of risk or anything like that. This is a sound, very risk-reward friendly swing trade on Twitter, thinking that the deal with Elon Musk buying it will kind of fade off or fall through. And there's a lot of downside potential for Twitter, not a whole lot of upside potential, and I was only risking $100, so I'm happy with including that. Made $300 there, but even if you exclude that one as well and literally only include cash secured puts and covered stock, I still make over $800, which is phenomenal. I'm happy with that for a month. Doesn't have to be fancy day trading. The wheel strategy is working wonders. So, very happy with that so far. Over $1,500 profit there. That's over $2,000 so far over the past month and a half, 2 months. And we're looking to continue this. So we're on to June, looking to keep this going, and let's see if we can keep chipping away. I made over $100, $178 this week, and I'm happy with that. 1 to 200 a week is what I'm looking for, and last week was perfect. Let's see if we can get it again this week. So that's it, guys. Thank you for watching. Again, follow me on Twitter if you want to keep up with my live adjustments to the game plan. If not, just come back next weekend for the results and the next game plan. And as always, guys, I will see you all next time.